So massive news for first home buyers. Not so great news for LMI providers at the moment though. I think you'd be silly to not buy now if you have the capacity to buy now.
No income limits. I know first home buyers in Sydney who have incomes north of 400,000 per year.
Yep.
And there's first home buyers on less than 100,000 per year trying to get into the market.
You could be on 500k a year now and still be eligible. So my biggest advice is if you've got the 5% sitting there, don't wait for something magical to happen. Just jump in and buy a house. It's estimated to save $1.5 billion in LMI in the first year. That's a lot of money. Now,
Which will probably add more than 1.5 billion in property values.
correct, and stamp duty and you know.
Yeah, so first home guarantee changes coming in 1st of August 2025. Sorry, 1st of October 2025.
So that's been brought forward. That was originally meant to be in January 2026.
Yeah.
So the first home guarantee used to be called the first home loan deposit scheme.
Yeah.
Basically, it's a 5% deposit with no lender's mortgage insurance for eligible first home buyers. Previously, there was income caps, so you couldn't earn more than 125k as an individual or 200,000 as a couple. So that's been completely removed. You could be on 500k a year now and still be eligible.
Yeah.
They've also removed the amount of spots available. So it was at one stage 35,000, well originally it was 10,000.
Yeah.
And then it went up to 35,000 and then 50. Now it's unlimited.
Yeah. Which is like, just thinking about that, no income limits. I know first home buyers in Sydney who have incomes north of 400,000 per year.
Yep.
And there's first home buyers on less than 100,000 per year trying to get into the market. So that's going to be a massive thing for the market for those high income earners who don't have to pay that lender's mortgage insurance because they can service more debt as well.
So to anyone that doesn't understand what lender's mortgage, well, LMI or lender's mortgage insurance is, basically, historically, if you didn't have a 20% deposit, you'd pay an insurance premium to either QBE or Genworth, now known as Helier.
Yeah.
Basically, what that insurance premium did was protect the bank for any potential shortfall should they have to sell your house if you didn't make repayments.
Yeah.
So let's say it was a $1 million property and you only had, $100,000, so a 90% LVR, you'd pay lender's mortgage insurance. Now, let's say hypothetically they sold that property for $800,000 and there was a $100,000 shortfall.
Yeah.
That insurance premium covered that $100,000. Now, got some interesting stats for that. A lot of people call LMI basically dead money or insurance, and I'm going to explain why that is. So in financial year 2023, there was 800. So this is just from one provider too. So this is Genworth.
Yeah.
So with Genworth, there was 871,000 active policies and only 240 claims, which means 1,630 policies.
3,630 policies.
Yeah. So not a bad insurance to be running if you're an insurer.
Even better in FY24.
Yep. So similar amount of active policies, but only 66 claims, which means only 1 in 4,885 policies make a claim.
Rounded up to 5,000, a 1 in 5,000 chance
that you would ever need that policy, yes.
Yeah, which is a pretty good investment.
Yet the policy on average costs around $30,000.
Yeah.
So you can see why the government wanted to sort of step in here and sort of disarm this thing. And what's more concerning as well is 70% of these policies are going to first home buyers.
Yeah.
Which isn't great.
Yeah.
The bank has a 1 in, let's be realistic about this, the bank has nearly a 1 in 5,000 chance that they're going to need this.
Yeah.
Yet they still make you pay $35,000 in case.
Yeah.
Heaven forbid the bank actually take any risk when putting on someone,
I mean, the thing is, you just said it there, a lot of first home buyers are included in these policies, but there's still going to be LMI policies issued to investors, to other people who are increasing their size of the property, because although you might be, in a 2-bedroom unit, so to speak, at the moment, you might increase to your family residence, you might still only put down a 10% deposit for that family purchase. So there's still going to be people who
100%.
take on the LMI policies.
Or people that don't meet the property price caps, which we'll talk about now. So property price caps will still remain in place. So we'll confirm the changes. So unlimited places, so there's no 50,000 spots anymore.
Yep.
It's as many as you want. Unlimited or no income cap. So no income cap at all. You only need between 2 and 5% deposit. So the 2% deposit scheme's eligible for single parents, and 5% for everyone else.
Yep.
No LMI. So basically, the government is guaranteeing the shortfall. So they've done the numbers themselves.
Yeah.
They realise that it's literally a 1 in 5,000 chance that they're going to need to draw on it.
I mean, it gives you massive confidence that the government is even backing.
Well, they're not concerned.
They're backing the market, knowing that if we do all of these changes and people do go out there and only put down a 2% deposit for property, they're almost guaranteeing that we have confidence in the market moving forward and increasing in value, and there's no downside risk for them, or very little.
It's estimated to save $1.5 billion in LMI in the first year. That's a lot of money. Now,
which will probably add more than 1.5 billion in property values.
Correct, and stamp duty, and you know, there's a reason the government's doing this as well. They are stimulating that bottom end of the market. Now, we'll run through the price caps. So, as I said, there's no income caps or anything like that, but you have to purchase for below a certain amount.
Of course.
So that amount has substantially increased for Sydney. So that is now 1.5 mil or below.
Which for Sydney, a lot of people, what does $1.5 million get you? It does get you a house in Western Sydney.
It gets you something.
Like if you're buying in the outskirts of Sydney, it still gets you a house.
Previously, it was around 900.
Yeah.
950,
but,
I think it was.
You know, 1.5 mil, is a massive unit market spread across Sydney within that price bracket. So
it will get you something.
Yeah,
previously,
for sure,
you couldn't buy under this scheme in Sydney. It was as simple as that. Melbourne 950, Brisbane and ACT 1 mil, Adelaide 900, Perth 850, Hobart 700, Northern Territory 600, regional New South Wales 800, but regional capitals, major regional areas such as Newcastle actually fall under Sydney's requirements.
Yep. Okay.
Yep. Regional Victoria 650, regional Queensland 700, regional WA 600, regional South Australia 500, and regional Tas 550.
Yeah.
So it is, as I said, it has come up quite a lot. So the Helia has come out today, so basically warning. So this is a company that's made, as we said, an absolute shitload of
800,000 by
policies,
30,000 per policy.
Yep.
Roughly.
They've made a huge amount of money off of LMI over the last whatever years.
Yeah.
So basically they've come out with some warnings today. Doesn't surprise me. They're obviously going to lose a lot of money.
Yeah.
So they're saying the scheme will further reduce premiums and volumes, threatening the viability of the LMI industry. Oh no. They're basically saying that the risk is now shifting to taxpayers. So, you know, they're saying that they're basically white knighting the Australian taxpayer.
Yeah.
Basically, they're now saying that they'll lose smaller lenders will be cut out of this as well.
Potentially, yeah. But, and I mean, that's...
Lenders have an opportunity to apply to go onto the scheme, though.
Yeah.
So I don't know how many lenders are capped to go onto this scheme, but I can't see any reason why they couldn't apply to go on the scheme.
This is just another lever that the government's using to try and stimulate the market.
Yep.
RBA's done their side. Now the government's trying to step in and do their thing.
Yep.
And this is just essentially Helia complaining because it's going to affect their business.
It's going to affect them a lot. Well, you think about it, it's $1.5 billion worth of LMI savings per year. They're gonna put some stats out there and throw a bit of fear if they can.
In terms of market impacts moving forward, we've got lateral economics. They've predicted up to 6.6% national house prices
in 2026
increase, and 9.9, so call it 10% in that first home buyer heavy bracket.
So that's sub 1 million.
Sub
areas.
1 million.
The Treasury, the government are saying they're only expecting a 0.5%. I don't know where they're getting their numbers.
Well, they might be 0.5% of the national house prices, but they're considering all of the regional areas that are going backward. I mean, it's not surprising because it is, but it also throws out what we discussed recently on another podcast for the price predictions from the domain economists, all of those predictions were with the original scheme.
Yeah.
So it was essentially a 5 to 6% increase for all of the major capital cities across Australia, and that was with the existing scheme. So it almost support the lateral economics is basically supporting the domain economic predictions.
Yeah. So the Australian newspaper has predicted between 8 and 15% jump in sub 1 mil.
Yeah.
Basically, they're predicting up to 80,000 buyers are waiting to jump on this.
Yeah.
Look, I think you'd be silly to think that it's not going to affect that sub 1 mil, and it will.
Yeah.
So my biggest advice is if you've got the 5% sitting there, don't wait for something magical to happen. Just jump in and buy a house.
It'll be interesting to see what happens with interest rates now, because all of the majors have predicted between 2 and 4%, 2 and 4 rate reductions.
Yep. One's
already happened. Now this has come in. It'll be interesting to see if all of the majors still predict up to 2 to 4.
Yep.
If this is going to have such a big impact on the market, potentially rates will stay the same to decrease that risk of the market increasing so rapidly. But if this does happen in combination with rates decreasing, the market's just going to keep firing.
I think you'd be silly to not buy now if you have the capacity to buy now.
But I still think there's a big opportunity for people to enter the sub $2 million price bracket or north of $1 million price bracket. I think because apart from Sydney of that $1.5 million price point for these income caps or the property price caps, there is a big opportunity for people with slightly more money to enter that north $1 million market, because you're going to be competing with a lot of first home buyers, obviously this sub 1 mil category. For anyone who has that extra income or extra capacity to service more debt and buy a more expensive investment or house, there's a massive opportunity there.
Oh, for sure. But in summary, great news for first home buyers. I think it's a great policy. It is a scheme that's been around for a while. This isn't a new scheme.
Yeah.
Labor government's just tweaked it a little bit to make it, I guess, a bit more achievable for more people. LMI providers are obviously carrying on about it. Understandable. They're going to lose a lot of money. It's as simple as that. Do I feel sorry for them? No, I don't. No. I think you look at how much money they've made over the previous years.
Yeah.
No, I don't feel sorry for you.
No, it's going to help. It's going to help first home buyers get in the market.
Yep. So 70% of LMI insured are first home buyers.
Yeah.
So that's who it's targeted to save. They've still got that 30% out there that they go after. But that's it for today.
Yeah.
We'll have to keep everyone tuned on the equity share scheme, which is still due to roll out in January.
Okay.
So I'll do a bit of research on that and see if that one's still going to roll out.
Mm-hmm.
That's the scheme that basically the government owns a percentage of your house.
Yeah.
Up to 40% for new, 30% for existing. That scheme has been in the pipeline for about 3 or 4 years.
It's probably not going to go ahead after reading
I don't think
changes
there's a need.
With this policy.
There's not a need for it.
Yeah.
That is very much aimed at your low income earners, because obviously you're only borrowing 60% or 70% of the value of the house.
Yeah.
So your loan amount's quite low. But at that lower amount, there's not many houses available anymore.
Yeah.
So
they might have to, especially if these predictions do happen with a 10% increase next year. You're talking about a 10% increase of that $1.5 million cap of Sydney.
Yeah.
You're talking about $150,000 in equity.
That's a lot.
In 12 months. So,
but that's it for today. Thanks for jumping on.
See you on the next one.
Thank you.